Hi, Nanafik here. In this lecture I want to talk about strategies. A lot of people believe that they just need a good strategy to become a good trader. That is not the case. There are a lot of good strategies out there. So strategies are good for sure. It's a very important tool for us. But in order to be able to trade good strategies, you have to be a good trader. So that is actually, if you are not profitable, you have to work on your trading. Probably, maybe your mindset, but also your ability to trade well. But when we have become good at trading, our strategies are the tool that gives us all the information we need in order to trade the market. So a strategy is a set of rules that tells you how to get into the trade, how to get out of the trade, how much you risk, and in which way you manage the trade while you're in it. That is a strategy. And there are tons of strategies. I will talk about a few. I will not give you a lot of strategies here. What I will give you is I will tell you what is a strategy, and I will show you how you can work on developing your own strategies. Maybe you receive a strategy and then you want to change it a little bit so that it fits to your trading style. If I have a course with 20 students, I will teach them the exact same thing. If you take these 20 students and look at how they trade after a year, they will be trading in 20 different ways. Your trading style is a very, very subjective competency. So, a strategy is a set of rules. And, for example, we have been talking about price action. We have been talking about pattern recognition. We have been talking about supply and demand. And a lot of traders, they use indicators for trading. I never use indicators, but I can give you an example. We could take, we need to go here. We could take a moving average. This is a standard. This is not a strategy you should be using because I have not tested this strategy, but just to give an example. A quite well-known and very described way of trading with the moving average is to have 2 or 3 different moving averages. And when they are all going in an upward direction and the short moving average goes up through the long moving average, then you have a signal. And the same thing the other way around, of course. So let's see here. Over here, we have the red one is the longest moving average. It's 100, and the black one is a 50, and the green one is a 20 moving average. So I will take the 50 and the 20 because the 100 is quite large for this. So for example, down here we have the green one, it's going down, and we have the black one, it's going down. The green one crosses the black one here. So here we should get a sell signal. And then we wait for the green one to pass up through the black one while they're both in an upward direction. We see that over here, that the green one goes up through the black moving average. So there should be a buy signal here. This is what we call a golden cross, and this is what we call a death cross. I will not talk about how effective this strategy is because I have no idea. This is not my way of trading at all. And the reason for that is that you can see we should enter here, and it is here. So it is very, very late in the move we get in. And then we should enter here, and it gives us an entry here, which is actually too long for my taste after the move actually has begun, because you can see we are halfway through this move and it stops up here. So this is not my way of trading at all, but it is just to give you the information about what is a strategy. This is a strategy. It's a rule that tells you when the green moving average passes through the black moving average and they're both moving in the same direction, then you have either a death cross or a golden cross. Yes. I will remove the moving averages and this. Then we have been talking about price action. And in price action, I will be looking at the momentum. And for example, let me find a good one. For example, here we have a bottom area here. We have a top area. We have racing tops, which tells me that this market is going up, but nonetheless, we have a breakout to the downside. I want a breakout and I want momentum before I trade this, so I don't get anything right here. So I wait, we go up again, we go down, I get a breakout, there's nothing because there's a long tail down here. My rule is that I need a breakout and I need a massive bar below that to confirm that we're going down. And then we go down again and down, and now I have more confirmation, so I would be selling. This is the rule, and it is based on this sideways move up here. Another rule in price action could be over here we're moving up again, and then short term we have a downward going movement, and then I want to buy when we break up through this movement, which we do here, and then I need some confirmation, and we get the confirmation here, so I will buy the market here. This is my rule. We have been looking at patterns. This is a pattern. Then we have over here, we have these 3 pushes, which is something I look at quite a lot. So we have over here, I'll take this one. Oh, sorry. We have a push to the downside. We have a second push to the downside here. We have a third push to the downside here. I like to look for 3 pushes. 1, 2, 3. And then we start going up. So I get a movement to the upside and I get a good closure here, a good follow through here. So I would be buying the market here. This is my rule. This is my strategy. And finally, we have been looking at supply, demand. Here we have some supply demand. So what we can see is the market turns down, we hit it. So I could have a rule that says that if we get pushed up here, then I will buy. Then I would be a buyer, maybe here. In this trade, I would probably lose because it actually turns down and goes further down. Then I have this area here, supply, demand. And what we have here is a market that turns into the supply and demand zone, where I assume we have maybe buyers lying. What I can see is we turn around and we go up, and I get some confirmation that we are going up. So I would be buying the market here. We have a new supply and demand zone up here. So this is maybe where I would have my target and take some profit. These are rules. These are my strategies. the strategies and the rules tells me how to enter the market and how to exit the market. What we need to be quite aware of is that now we have been looking at this chart, and it is only a very, very limited piece of chart, and markets, they change over time. The markets today are acting more or less like the markets last week were acting and the week before, but markets today are acting a little bit different than they did 1 month ago, 2 months ago, 1 year ago, 2 years ago. Market conditions are constantly changing. It sometimes very fast. For example, when we had the breakout out of Corona, then the market turned from zero momentum to extreme momentum within a very short period of time. When we had the war in Ukraine, between Ukraine and Russia, then the markets, they turn dramatically structure and way of moving within a very limited period of time. But these are very extraordinary situations. But market is constantly changing. Still, they are acting the same as they did a short time ago. So when we have to figure out whether a strategy is working or not, we have to look at the market in a much longer period of time than here, which is 2 weeks. We're looking at that is not enough at all. So what I am doing is I am testing my strategies. I'm going back, and you need to go years back. So what I do is I normally take a couple of months in 1 year, a couple of months the next year, a couple of months another year, and so on. And then I go in and I add my information. I have added some dates in this Excel sheet, and then I will say here, okay, I buy. And then I will say, down here, we bought the market, and I had up here a target, so I will enter, it is 223 points. It was a good one, for sure, it was. Then up here, let's say, for example, that I sold here because the market is being kicked down, then I'm short. But in this one, I will be stopped out because the market actually turns around and goes up from here. Short, and then I lost 133 points. And this way, I continue. So now this is done and we go up. So maybe I buy up here because we get up here. I'm not sure. This is not a strategy. Let me tell you that. This is just to explain to you how I work with this. So here I will be stopped out. Maybe this is in the middle of the night. I would not be buying this market. So, but down here I for sure would be selling. So this would be a losing trade. The second losing trade in a row. And minus 65. And minus 133. Then the market, this one is probably not working anymore. Now we have supply and demand down here. And I can see that we go up from here, so I would be buying the market here. And I would have some new supply and demand up here. This is examples, remember, this is just examples to illustrate. So it was a long trade and I had 137 points. So this I will do, and I will collect several hundred trades. 10 trades you can't use for statistics. 20 you can't use. You need 100, 200, 300, 400, 500 trades. And then you need to be aware of, you can get some really, really good results in here that, okay, now I found the really good strategy and it's just working and it will make me 5%, 10% every month. But as soon as you start trading the markets, it will change. You're not able to make the same results that you do here in a situation where you can see everything, in a situation where you're not affected by the market, in a situation where you can sit and think for a long time about what should I do here, in a situation where you do not have money in the market. The results you get in Excel sheets like these are not realistic. You need to, depending on how good a trader you are, depending on how well you know your strategies, you can maybe make half of what you're doing here. And if you should be able to use the knowledge you get from here, you need to be able to follow the strategy. So if you are still struggling with making too many mistakes, you're still struggling with staying in your trades, you're still struggling with whatever, over trading, whatever problem it is you have, then you can use this for inspiration for when you actually learned to trade, because the real trading starts when you have become a good trader. You need to be a good trader before you can start working with the strategies. But this is how I work with strategies. This is how I develop my trading. I can tell you that this is something I do when I'm on vacation and I'm sitting by the pool, or I'm in an airplane for a long time or something like that. Then I have my laptop and I sit and work with my strategies this way. The very good thing about this process is that you get a lot of knowledge about the market, and all the time you spend working with the charts, working with the strategies like this is well given out, because your eyes learn to look at the chart. You will be so much further after have been doing this for some months, because when you start trading the things you have been working with here, then suddenly you will remember some things that you saw while you were working in a graph, at a year, at a period of time, or whatever. So you will memorize these. This is also a way to speed up your experience. So I hope this has inspired you. And if you spend the time doing this, I promise you, you will get so much back from it. But strategies are our set of rules for acting in the markets. I wish you all a great trading week, day, whatever, a great weekend for studying charts, whatever. And I hope this will help you improve your trading. Bye.